Hello, and welcome to Golden and Financially Empowered Financial Lessons for Seniors. This webinar is brought to you by Debt Reduction Services. My name is Todd Christensen. I'm Director of Education here, and I'm glad you've joined me today. We're going to be going over some important information for financial information for our seniors, whether you are yourself a senior or you have a family member that you are concerned about or looking for ways to help them reach their own goals. This is a great webinar to begin that issue or begin investigating that issue. So just very briefly, Debt Reduction Services, Inc., we've been around for since 1996. Debt Reduction Services, Inc. is not the name of an industry but a company. We are a nonprofit organization, been around all over the country, helping people learn and improve their financial capabilities, everything from budgeting to saving, getting out of debt, increasing or improving their credit, and so forth. So this is just one of many of the webinars we have available. Glad you've joined us today. So here's what we're going to be going over on this webinar for seniors and some of the lessons that all seniors should know. This is not an exhaustive webinar of all the things that would be good for seniors to focus on or to be aware of in their golden years as far as money goes, but these are a few. So we're going to start off with the idea of picturing change, the process of change. One of the biggest problems that not just seniors, but that we all have is that we get into a groove and we stay there even when it's taking us in the wrong direction. So we want to make sure that when you see opportunities to improve, here's some ideas. We'll talk about ideas how to correct some of our behavior or improve upon it. We'll go through some signs of financial trouble. We'll go over some of the reasons why seniors are particularly susceptible to bankruptcy. And we'll go over numbers of the day, some statistics that might be of interest. Coming down the home stretch, we'll talk about ways to increase income and or decrease debt. We'll talk about some scams that particularly target seniors with a little exercise on phishing, email phishing, and we'll provide some resources. Now, to begin with, make sure that you have a piece of paper or something to note, to write a couple of notes. You're going to need to write down 3 passcodes. If you want credit for this course, for this webinar, you'll need these 3 passcodes in addition to taking the quiz, and you'll find the quiz at the same place that you accessed this webinar, along with handouts. So if you'd like to pause this and make sure that you grab the handouts, it's downloadable, they're free, and grab something to take notes on. Okay, so let's talk about picturing change and this whole theory of change. And this doesn't just refer to issues of in the finance world. Anything that we want to do to change in our lives, this is a universal application. So first of all, we need to picture where we are, in particular where we are financially, where we want to be, where we want to be financially, and then where we are. So think about, whether you want to be in a different financial situation in a year or in a month or in 3 years or 5 years or 10 years, and where you are now. Many of our seniors obviously are on fixed income. If they're retired, no longer working full-time, one of the challenges, but if there's no goals, even without that, even without the employment, we still need to have some financial goals. Where do we want to be? What do we want to do? Where do we want to go? What do we want? What are we going to need financially to purchase for our home or for our lives? Whatever it might be, we need to envision what that future includes. So figure that out, where we are now, look at and find out the difference. Now, the next thing to do is ask ourselves, are we content with where we are now? Is there a huge gulf between the now and the future? Are we kind of wandering financially? Do we have a good hold or grasp of our finances? Or are we just kind of meandering here and there wherever life takes us on a day-to-day basis, which is unlikely to be anywhere in the direction of where we really want to head? So make sure, consider these. Do we like where we're going, like where we're at? So once we know this, where we're going and what where we are, we have to ask ourselves this question: what are we doing to improve the chances of moving from where we are to where we want to be? Are we doing anything? Most people, honestly, probably 60–70% of our fellow citizens have no plan on how they want to get from where we are today to where they want to be the next day. Nothing written down, nothing even considered. So tell yourself, first of all, hey, not just I want to change, but I can change and I will change. And then decide, talk about, and this is something you can repeat on a daily basis, and kind of positive reinforcement. It's not mumbo jumbo. There are studies show that by repeatedly telling ourselves what we want to do and what we're going to do, we're much more likely to actually do them and achieve them. But figure out what are some of these steps that we're going to need to take from here to there, and then ask ourselves, what's one step I can take in the right direction today? Actually get moving, get changing, make a small step. For most people, it can be a very small step between where we are today and where we want to be. But the fact that you can take a small step, and we'll talk about a few of these potential single steps that we can take today here before we're done. But that's the theory of change. You're welcome to, of course, rewind, go back through this, just go through these steps anytime for anything you want to improve upon. So before we proceed, here is the first password that you're going to need, or passcode you're going to need in order to get credit for the quiz. It is PRECIOUS, P-R-E-C-I-O-U-S. P-R-E-C-I-O-U-S, PRECIOUS. Make sure you write that down and come back to it if you need to, of course. All right, so let's begin. First, what we're going to talk about is recognizing signs of financial trouble. Whether this is for in your own life, or the life of a family member, or a parent, grandparent, aunt, uncle, neighbor, friend. Let's just go over a few of these ways that things that can cause, or that should cause us concern, give us pause, and lead us to making some changes. So, for example, when we talk about banking, do you have a regular balance? Do you regularly balance your checking accounts or your savings accounts? Do you know how much money you have available to you? Do you have even have a checking account? If you don't have a checking account at a bank or credit union, if you're what's termed unbanked, or if you don't use that account at all, if you're only using a prepaid card, there's a chance that's one of the general signs that there could be trouble coming down the road. Do you have debit card purchases that are declined from time to time because you don't know how much are in your checking account? Make sure that, because there are a lot of people that don't use checking accounts because they don't like the fees associated with overdrafts. You can opt out of that overdraft and stop any kind of fee associated with being declined. It'll just say this purchase is declined, and then you don't have to worry about paying that fee. Let's talk about kind of signs that have to do with debt. If you're carrying a balance on a credit card from one month to the next, and you're among the 65% or so of Americans who are doing that, that's a sign that there's trouble. We should be paying off our debts, especially in our senior years, where we cannot typically afford additional fees, interest for carrying a balance. That's a sign that we need to pay more attention to our finances. If we've gone over our credit card limit, that's going to cause us to incur additional fees. Plus, it's a huge sign. If we are at the limit of our credit card, that means we're not paying attention or we're heading in the wrong direction. Are we borrowing money from children for living expenses? If we are we in a home that we can't afford based on our income? Now, if children offer and want to do this sort of thing, that involves something a little different. But if we continually have to turn to family or friends or others to keep us in a home that we probably can't afford on our fixed income or our current income, that's a sign of trouble. Even this, do you have a mortgage or a line of credit that you may not be able to pay off before you're in your 80s or 90s? This has been a trend, and it's a pretty disturbing trend among our seniors to enter our senior years, our retirement years, with some pretty large mortgages. What's the problem with that? Well, again, if you're no longer working, unless you've got a pretty good handle on your budget, which some people do, that's fine, having to pay a pretty large mortgage into your 60s, 70s, 80s, and beyond can put a pretty massive strain on our income because typically it's the largest expense in homes if you have a mortgage. How about co-signing for a loan for a child, a grandchild, or another family member? I'm going to plead with you, please beware that's a path to some major problems. We have had many clients come in through for bankruptcy counseling before they go see an attorney or before they file, and that have shared that they have co-signed for a child, a grandchild, for a car, for a home, and they've either skipped out on that or they lost a job or whatever. Be aware that if you are co-signing a loan, you are equally responsible, and if they stop making payments, you are 100% responsible for that payment. Don't co-sign for a loan. Don't co-sign for a loan. Don't co-sign for a loan unless you are absolutely sure that you're never going to have to worry about making those payments, or that if you do, you can cover those payments. Don't do it because you want to help and they come pleading with you, please, I need to help, I need to get in, that's the only way I can get into a home. If it's the only way they can get into a home, they're probably not financially ready to get into a home. There are ways to build credit over just a year or two, and they'd be better off going to one of our credit building classes, and they're free, than it would be to put your financial life in jeopardy. Getting a reverse mortgage, but without understanding how that works. This is a growing trend that a lot of seniors are turning to reverse mortgages because they hear all these great things about it, that you can get paid for paid back for the equity that you've put into that home for life. But there are some definite limitations, some definite concerns, and highly recommend you contact a HUD-certified reverse mortgage specialist. Don't go to directly to the lender. They're going to, of course, want you to do this because that's how they're going to make money on it. Go to a HUD-certified reverse mortgage specialist to get some good advice about it. If you're on fixed income and I can throw out this number, 15% of your monthly payment is going toward a car payment or toward transportation generally. That includes a car payment, your insurance, gasoline, registration, maintenance. If 15 out of every $100 that you earn or that you have coming in is going toward transportation, that may be a sign that there's some trouble coming down the road. For other people, it might be 5%. Other people, as much as 25%. But when we counsel seniors or anybody, any adult for that matter, who has 25, 35, 40% we've seen 50, 60, 70% of people's income going toward paying for making car payments and insurance and other things, gasoline. That's the recipe for disaster, financial disaster. So keep your transportation low. If you're taking out or considering taking out pretty risky or high fee loans like payday loans or title loans, before you ever do anything like that, seek out a trusted third-party help or a family member that knows their stuff, or go to a nonprofit credit counseling agency like Debt Reduction Services or another member of FCAA.org. Savings. Do you have no savings or very little savings? Even on fixed income, there are often opportunities to save something for emergencies. As far as scams go, do you feel pressured by strangers or even family members to make investments that you don't understand? Family members may not, hopefully, be trying to scam you out of money, but if you don't understand the opportunity, you just politely decline or ask them to explain it better until you understand it. If you do not understand it, do not give your money to anybody, strangers especially. And then just generally, if you frequently miss paying your bills or utilities, if you're delaying doctor visits for financial reasons, if you've pawned possessions or if you considered pawning possessions, if you feel you have to go back to work just to make car payments or to cover your mortgage, if you lose sleep generally at night because of financial concerns, these are all signs that maybe some more attention needs to be paid, more energy put toward taking care of finances. So let's talk about seniors and bankruptcy. We're talking about this from the perspective that we help thousands of people who are going through bankruptcy. Every year, before they can file, they have to see a nonprofit credit counseling agency such as Debt Reduction Services, Inc. And then after they file their petition with the court, and before the court actually discharges their responsibility, discharges them of that responsibility, they need to come back to an organization like ours or another agency that's approved to take a 2-hour debtor education course or personal financial management course. And we have surveyed people over the years since this went into effect in 2005. We've surveyed thousands of people, and here's what we've found as far as seniors and why they're filing for bankruptcy. Number one reason they file for bankruptcy is the same reason, though not quite as remarkable or as high, that all other adults put for their number one reason for filing for bankruptcy, and that is job loss or income reduction. For most seniors, there are many that it involves job loss, that are working into their 60s, even 70s, and then they lose a job. Others, it's just going from full-time income into retirement, Social Security only, which a large percentage of our population is only essentially on receiving Social Security. That reduction in their income without a corresponding reduction in living expenses, or combined with other reasons we're going to get to in a minute, 34% of seniors who file for bankruptcy say it's because of that loss of income. The next largest is not medical, even though on the news and even in some surveys you'll see organizations or media claim that bankruptcy is the number one reason for people filing for bankruptcy. Excuse me, medical is the number one reason for people filing for bankruptcy. Of course, most people, especially seniors, do have medical expenses when they file, but that doesn't mean that's the reason they file for bankruptcy. Our survey actually asked them what was the cause, and this is self-reported, but what was the reason you're filing for bankruptcy? Even those who had medical debt were not saying it was because of medical. It was because of job loss. Number two, because of overuse of credit cards or not overspending, but just using credit cards too much and maxing them out, or having to pay, getting too much debt and having to pay high interest on those. 25%, one in 4 senior bankruptcies is because of overuse of credit cards. Then number 3 is medical, 18%, so less than 1 in 5, so just a little over 1 in 6. bankruptcies for seniors is because of medical. Of course, what we see is when somebody does have medical expenses, they're usually pretty significant medical expenses. Number 4, 8%, about 12, a little over 12, 1 in 12 is just plain overspending, going on either shopping sprees or not controlling your spending. After that, divorce, about 3%, being widowed, another 3%. The divorce is quite a bit lower for seniors. For the general adult population, it's about 9% of bankruptcies are blamed on divorce. For seniors, it's only about 3%. I guess we figure that if we've stayed married that long, hopefully we'll be able to make it through. But the sad reality is that there are quite a few that will divorce in their senior years, and that can lead to some major financial issues. And then 3% are for being widowed, which especially if there is no life insurance policy, can be a financially devastating, let alone emotionally issue equal to divorce. So those are the main reasons people file for bankruptcy. Here's some other statistics that are interesting that are really eye-opening about our senior population going into retirement, going into those senior years. Almost 60%, 59% of those who are filing for bankruptcy had a mortgage when they filed for bankruptcy. 60% of them. The goal, of course, is to make it into our retirement years and not have a mortgage at all. 64%, even more, had $20,000 or more in non-mortgage debt. And the most common debt is not medical. Medical is the third most common debt to have in the senior years for those who are filing for bankruptcy. Number 1 most common debt, credit cards. 86% of bankruptcy filers who are seniors in their 60s or higher, 86% had credit card debt. 41% had mortgage debt, and 38% had medical debt. Right after medical debt, 37% had car loans. And then there's a big jump down from there down to home equity at just 13%. 1 in 20 had payday loans. 1 in 25 had student loans still. That's not an insignificant number. Something else of interest, how much did they have in savings at the time that they headed into bankruptcy? More than half, 54%, had nothing in savings, nothing. Whether it was medical debt, whether they were going into credit card debt, whether it was a job loss, just retirement, whatever. 54% had $0 in the savings account. Another 30% had less than $1,000, and of those 30%, most of them probably had less than $100. So that's 84% of our senior population who filed for bankruptcy had nothing in savings when they headed into bankruptcy. Whether, at the time, whatever it was that happened that sent them into bankruptcy. Only 6% had between $1,000 and $2,500. 3% had $2,500 to up to $5,000. Another 3% had up to $10,000, and another 4% had more than $10,000. So those, if you take those together, that is 16% of seniors who filed for bankruptcy had more than $1,000, and about 10% had more than $2,500. Typically, what we see in those are some of the larger medical debts people are having at that point. So, conclusion, as far as why seniors are filing for bankruptcy: too much credit card debt, too much mortgage debt, and no savings backup that would minimize medical debts or medical expenses we incur in our senior years, and dealing with other medical expenses. So, and I'd also throw in there too much car loans, too much vehicle debt. Okay, so let's move on to the numbers of the day. Mentioned some of these. 85%, sound familiar? That is the percentage of seniors who have had less than $1,000 when the event occurred that led them into bankruptcy. So 85% had $1,000 or less. Most of them much less than $1,000 when they something happened in their lives that sent them into bankruptcy. 84%, that's the percentage of seniors who had credit card debt. Both of those numbers we would like to see much, much lower. Those are some trends that are very concerning. All right, here's where I'd like you to grab your handout because there are a couple of activities on page 3 in your handout that I'd like to just walk you through. So go ahead, you can go ahead and pause this until you get your handout or download it. Ideally be printing it off because you're going to want to write on the handout. So let's go ahead and on page 3 in that handout, and the handout, again, it's entitled Golden and Financially Empowered. On page 3, there's a table near the top that it helps us to identify reasons why we are limited in our income. A lot of seniors will say, I'm on fixed income, meaning I've got Social Security benefits and that's it. And there are, in some cases, there are opportunities to increase our income. A lot will say, well, anything I earn will diminish my benefits, and that is not necessarily true. Yes, there are times when that may be the case, but other times we may be limited by no choice of our own, whether it's physical, emotional, mental capacity, deterioration, whatever it might be, as we age and as our bodies change, that may be the case for some people. Others, it might just be an energy level. I just don't feel like working that much. I'm worn out because we think about going back to work, and it might only come to mind that, hey, if I'm going back to work, I don't want to have to stand on my feet for 3 or 4 or 5 hours at a time because then I'm exhausted in the end of the day, and what about the rest of my life? There's other things I want to be doing. So, but go down this list and really think about why we're not looking at increasing our income, especially if we need additional income. If we don't need additional income, skip through this whole section right here. But if we ever complain about not having enough to do something we want to do in our senior years, there's only so much that we can cut as far as our debt and expenses. So income needs to be another option. But ask ourselves, is it my choice, or do I have no choice in the matter when it comes to employability? Is there something I can do to increase my employability? Am I coming up against age discrimination in certain areas of employment? Is it a lack of time? Am I prioritizing other matters in my life? Is there a physical mobility issue? Even with that, are there other things that I can do? Do I have other skills and knowledge that I can share that wouldn't require me to leave the home and go to a place of employment? Other physical or health issues. Is it a skills or knowledge thing? Am I willing to learn? Am I willing to learn new tricks? There are plenty of stories out there of people all the way into their 70s, 80s, 90s that are going back to school, or whether it's a college, university, or community college, whether it's a certificate program, whether it's just a community education opportunity. Threats from creditors to take my home. Am I about to lose my home? It's going to be foreclosed on. Are they threatening to garnish wages if I'm still working, or to take any tax refund that I'm owed? Do I see it as a threat to my Social Security again? Is that why I'm not looking for work or considering additional income? Is it lack of transportation? So these are just a few of the limitations that we place on ourselves, or that other circumstances can place on us as far as our ability to increase our income. But go through that, make just check the column. Is it my choice? And if it is my choice, then that means that there's opportunities there. If it's really out of my choice, think about it for a week, come back to it again and ask and consider it again. Is it really something that's out of my hands, that I have no choice in the matter? And then the last part that you'll see here on the screen, go through and map out your priorities. Thinking about some of the things that we could do to increase our income, whether it's going back to work, whether it is volunteering and finding, or part-time work, full-time work, selling from home, whatever it might be, map it out. And then, you're looking at these limitations. What is it that is that's keeping us from increasing our income? If we just want to say it's our age, how big of a priority is it to overcome that limitation? If we just think that's too hard, first of all, we're going to put it way up at the top. And if it's a huge priority for us, we're going to put a big circle up there right at the top. It's hard, but it's important to us. If we say, oh, it's a lack of time, I don't have enough time, that seems like it's something fairly easy to fix, and so we map it down there near the bottom. But is it a big priority for us? If it's not a priority for us, it'll be a little small circle down there at the bottom. If it's a mobility issue, that might be something really hard, so it's going to go back up to the top. And it might be a huge circle that we put there because it might be hard to address, or health as well. If it's a skills thing, that might also be hard. But if it's a priority, we can make this huge circle up there. Again, the size of the circle is how much of a priority is, and whether it's difficult or easy, it places that limitation. And so what we end up with is a map that what we want to do is find the big circles down near the bottom. These are top priorities that on limitations that are easy to overcome, and we address those first. And then we find the big circles that move up toward the top and leave the smaller priorities out of it. So if there's any limitations that we have, this is a way of mapping those that we can attack first. Okay, I also want to talk here about options for not just increasing our income, but what about decreasing any debts that we have? Decreasing debts in our senior years are going to be it's going to be the same options we have at any other time of our lives. You'll see on that same page, on page 3 in the handout, in the box on the call-out box on the side, lists the different repayment options. Everything from consolidation payment, which sounds like a good idea. Let's take all of those debts and put them into one. It makes things simpler to address. Challenge is that it's hard to qualify for a consolidation loan, and even if we do, typically lenders want to they don't want to take on additional risk of consolidating all that debt, and so if they do, they're going to charge higher fees. So it's harder to get, and typically higher fees. That doesn't mean that you shouldn't look into it. Just understand that every time you apply for a loan, even a consolidation loan, an actual loan to pay off your debts and leaving you with one debt, that can have a negative impact on your credit rating, make it more difficult, more expensive later to get a loan. Another option, consolidated or credit counseling, which is not a consolidation loan; it's a consolidated payment. You make a payment to a credit counseling agency like Debt Reduction Services. They turn around and they disperse those payments to all your creditors. So it feels like a consolidation loan, but all those debts are just continued to be paid off. And credit counseling agencies typically will negotiate better interest rates, better monthly payments. There are fees associated with that, and it takes typically between 3 and 5 years. It doesn't go beyond 5 years, and it is not. Credit counseling is not a factor in a FICO credit rating model. That's not to say it won't impact. The way that you pay your debts always has an impact on your credit rating. But if your goal is to build your credit, that's one thing. If your goal is to get out of debt, keep in mind that is it's actually a separate goal. Debt settlement is another option. It's a third party that you contract with that you've contracted with to negotiate lower principal balance. So they'll promise, hey, you can pay off just half of what you owe through us, and so pay us for a year or two, and then we'll take that money and negotiate 50% payment or half of what you owe, and they'll accept it. This couple of things to keep in mind. First of all, it also takes between a year and 4 or 5 years. Rarely successful, and by rarely I mean typically single digits success rate, and always hurt your credit, though admittedly most people who are going that direction typically don't really care about their credit at that point. But more importantly, it can lead to judgments against us, wage garnishments, tax refund garnishments, lawsuits, because creditors, if they're owed a couple of $1,000s, they're not just going to forget about it for a year or two or wait for you to come up with a half of what you owe. Bankruptcy is a legal proceeding in federal court. Essentially, it's asking the government to protect your assets from creditors who want to take them. Those assets not only include your home and personal property, but also your income. So if you're being garnished, if your wages are being garnished, if you're still working, talk to a bankruptcy attorney about your options. Or if you're just worried about foreclosure, about losing your home, make sure you talk to an attorney. You can file for bankruptcy on your own. I love what an attorney told me once on a cab ride back to the airport after a conference we had attended together. And I asked, what do you tell people who want to file on their own, or asking if they can? And he said, look, you can file for bankruptcy on your own, just like if you have appendicitis, you can take out your own appendix. But it's going to be pretty painful and may not be done properly, and there can be some serious long-term consequences to go along with that. So I always recommend considering an attorney, and don't give up just because you think, oh, you have to pay attorney, I don't have enough money to pay attorney. Call around. There are many attorneys that will arrange payments or help you figure out how you can come up with the money. Ignoring debt is not an option. You might think, well, they haven't called me yet. Most people remember when they lent money to a brother-in-law 35 years ago. And companies are the same way. They're not going to forget who borrowed money from them. They have records for that. So it also typically leads to additional fees, increased damage to our credit rating, and then high anxiety when we start getting collection account phone calls. Paying off is agreed, ideal. If you can pay your debts in full, on time, regularly, that is the best option for getting out of debt. But those are your options. Call around, check with other people what their experiences have been as well. But a nonprofit credit counseling agency is, of course, I'm going to say that because I work for one, but that's a great place to start and get good advice. Here's your second passcode or password. It's METALS, M-E-T-A-L-S, METALS. Write that one down. You're going to need it for your quiz. Okay, let's again go back to your handout. We're going to go back to Match Game Senior Scam Edition. What I'm going to do is go over a number of the scams that seem to target seniors. Some of these have been around for a long time. Some of them are fairly new as of this webinar, and there will be others that they're coming up with all the time. The actual form will change, but the principles behind these scams, you'll start to recognize similarities. Okay, first of all, counterfeit prescription drugs. These are this occurs when people go online to order their prescription medications on the internet. Promises of 50, 60, 75% off. Just because they say it's coming from Canada doesn't mean that it's produced in Canada. It could be coming from anywhere in the world through Canada or anywhere else. Talk with a local senior resource, community resource before you start ordering things online. There's a large percentage of people who go across the border, the southern border into Mexico to buy medications. Again, why are they cheaper? Because there are fewer regulations. And so you might think, hey, well, that means that it's easier to produce down there. It's also easier to produce fraudulent or not just sugar pills and sell them as medications, but sell things that actually can do you harm. Fraudulent anti-aging products. Anti-aging product can be anything that is as a bogus supplement, promising you better health, better appearance, to equipment or even treatments that these providers know that they are preying upon our desire to feel better, to look better, to get better. Be so aware of and beware of such claims. Let's see. Here's the one: funeral and cemetery scams. Oh, these are heartbreaking because they happen at the time when we are most vulnerable, having recently lost a loved one. This funeral scam, or somebody may actually, the fraudster will actually show up at a funeral and get the widow or the widower to the side and say, you know what, I know this is a terrible time. And introduce him or herself and say, your husband or your wife and I had just gone into business, made a business dealing together, and they've learned all this from the online or the newspaper obituary, and they're just very bold to do this sort of thing. But they say something like, we just went on, we just decided to go into an investment together or start a new business together, and I had put money up, and your husband or your wife had said that they had the insurance to cover it, and if anything happened to me or to him, and now without him, I can't continue on this, and I've already fronted $10,000, and they'll actually ask you to come up with $10,000 out of the insurance to live up to this supposed agreement that they never actually had with your spouse. So that's kind of it's an obituary scam. It's frustrating. Cemetery scams, funeral home scams. Is there a fine line between being an aggressive salesperson and a scam? I don't know. I can tell you from experience that I am highly put off by funeral homes that try and sell you a $10,000 or $20,000 copper vault cover that is seen during the funeral and then buried in the ground with another, $500 or $1,000 for engraving upon it. At a time when we can afford at least, or when we're very vulnerable and emotionally upset, be careful. Take somebody with you to the funeral home if you're in an emotional situation. Don't let anybody tell you that, hey, your loved one deserves the best, meaning inferring that more expensive is better. That's in poor taste, in my judgment. Investment scams, whether they're pyramid schemes, of course, Bernie Madoff, the epitome of a pyramid scheme where you take money and you end up giving it to take money from a lot of people and give it to people who have donated or given the money previously, and then you need more and more people to buy into this scheme, and eventually it collapses completely. Or whether it's the Nigerian prince type of scams that say that you get an email that's saying, hey, my husband is a former Nigerian prince, or you insert the country, and we are trying to immigrate to the United States and need help setting up a bank account, and the authorities are not allowing us to do so, but if you would help me set up an account, it's going to cost about $1,000. We'll be able to share $500,000 with you. It sounds like this great investment opportunity to help somebody out in time of need, but it's a scam. It is a scam, always will be a scam. Anytime anybody tells you you need to invest $1,000 and we'll get $500,000 or $1 million, and because they're going around a system, it's a scam. Medicare and health insurance scams. These might seem pretty harmless because you think, well, I'm not out any money. These are scammers that are trying to get your Medicare card number, your insurance information, because what they do is then they turn around and they file bogus claims. Again, you might think, well, that's not skin off my back, but it is. It costs the system billions of dollars a year, which means our whole system costs more for all of us. Don't give out your Medicare cards for any reason except directly to the provider. Phishing scams, these are emails that are promising thousands of dollars or more for seemingly simple services or assistance or to verify your account number. Even if they say, hey, this account is, we believe it's been fraudulently used, would you please log on to make sure that it's not been compromised, and they'll ask you to click a link, and it'll take you to a website that looks like your bank or your credit card website, but it's not. But credit card companies will not send you an email asking you to log on to verify your information. They may call you or they may email you, but they will ask you to call their main contact information, which you can find on the back of your credit card. Repair fraud, anything from a vehicle repair shop that's taking advantage of you because they're trying to scare you into services or product you really don't need. Oh, it looks like your tires are pretty bald on the inside. Have them show you, well, you're going to have to bend down here. No, you can raise this up so I don't have to bend down. They are taking advantage of you. They'll do anything they can. And this is not, I would hope not even the majority of mechanic shops, but this happens. Do not pay for a service that you don't need. And that, you know what, it might even include changing the air filter in your cabin for $30 or $40 or $50 when it costs $5 or $10 to get it at the local shop, at the local parts store, and it takes about 5 minutes to replace. Fairly simple. Sweepstakes, lottery scams. If it sounds too good to be true, it's probably not just too good to be true, it's probably a scam, and they're going to try and figure out, and people will lose tens of thousands of dollars over a 5-6 year period trying to collect on a lottery that they were promised they won, and they actually never did win a lottery. There is no Canadian lottery. There is no national Canadian lottery, no lottery that sweepstakes that you're going to win. There are other things you can do with that money than give them to sweepstakes. Avoid anything that sounds too good to be true. Telemarketing, phone scams, particularly targeting seniors because senior population is much more likely to be on to conduct business by phone than the rest of our population at the moment. But these can include those fake, and they're playing on our heartstrings. Charitable solicitations. Hey, they're first responders in your area need your support. Some of the widows are not being taken care of, and so we need whatever they're going to say. They will say whatever they can to tug at your heartstrings to get you to give them a credit card or a debit card number or send in some money. These organizations do not solicit phone charity like that, so avoid that. Or maybe right after a natural disaster, you might get a phone call from somebody saying, hey, this massive earthquake, the victims need our support. Can we count on you so that we don't lose more? Go directly to a trusted nonprofit charity. Their website or their phone number. Don't provide your information by phone to somebody who calls you. The last one I want to talk about is grandparent scam. This one is since about 2014 or so, 2013, been growing. You get a phone call and there's a hysterical voice on the other side. It says, Grandma or Grandpa, I'm so sorry to have to call and ask you, but I'm in trouble, and please don't tell Mom. And they may even know the name of your grandchild, and so they may even know, or they might just say, hi, Grandma, guess who? Guess who? And so you say, oh, is this Debbie? Yeah. And they'll go on and give you this story that they've been arrested. Maybe they were drunk driving, or a friend had put some legal substance in their backpack and they got arrested, and they're in jail and they need $100 or $500 to get out of jail. And they'll even put somebody else on the phone. I'm in jail I'm in the sheriff's office right now, and Officer so and so says that if you give him the payment, if you pay give him a payment, I can be released on bail. And so they'll turn him over to somebody who sounds official, and it's a scam. It is a scam, and you will end up regretting it. Just ask them, make sure that you and your grandchildren, your grandchildren, that they're, know things about them, like, okay, well, tell me what's your girlfriend's name or what's your boyfriend's name at the moment. Or, hey, okay, so tell me what we had for dinner when you came over last week. I actually ask that, even if they haven't been over for dinner, weren't over for dinner last week. Ask them, when was the last time I saw you, just to confirm. And they're not going to be hurt. If it's truly your grandchild, they're not going to be offended if you ask them to verify who they are. So that's the grandparent scheme. Okay, so take a moment, go through that handouts, and match the number of the scam name to the letter on the far right-hand side. The numbers on the left-hand side, the numbers are on letters are on the far right-hand side, numbers on the left. Match the scam name to the description. When you're done with that, come on back. All right, so let's now talk about going fishing. This is PH, fishing. Again, on the handout, on the next page, on page 6, you'll find a copy of a sample phishing email, and you'll be able to see that there are several indications that you should be suspicious of, that this is a scam, that they're going to be asking you for money or for credit card information or something. Take a moment, look over the language, look over the formatting, and see what you think. If you want, go ahead and pause it and then come on back. But here, so now if you've gone through it, go ahead and look at the next page, page 7, and I've circled or indicated some of these indicators, some of these things that should be signs that, hey, there's something wrong here. Most phishing emails have grammar problems because they are coming from countries where there's very little regulation about these kind of deals, and you'll end up noticing that their English is not always the best. This is, by the way, another great reason for our children and grandchildren to stay in school and to focus on. There's a reason why grammar is important. It's because otherwise you might be considered a scammer when you're sending emails. But right off the bat, dear customer, you know what? Banks, credit unions, financial institutions, businesses have the ability to include your first name. There's no reason for them to say dear customer, way too generic. But you might think, well, this is an accurate email because it's got as you're looking at that handout, it's got the logo of the bank on it. That is way too simple just to copy off the internet and put into an email. That's no indication of legitimacy at all. You look at the end of the first sentence, and it actually is a sentence, but it ends in a question mark. And not only in a question mark, but in a space followed by a question mark. And then more non-sentence type phrasing after that. So it doesn't flow. And you might say, well, okay, one mistake, that's fine. Look at the next one. Our technical services department. Okay, grammar is important to businesses. So if they're going to capitalize technical and department, they should probably be also capitalizing services in between. And then a department does not agree, the verb does not agree with department. It should be our technical services department is, not are. Carrying out planned software upgrade, blah, 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 blah. And then you see at the end of that sentence, there is no space in between the last word of that sentence and the first word of the next sentence. And then, again, it's signed customer advisory with the bank there. There's no phone number, there's no name, there's no no contact information. If you were to hit reply, it would likely go to a different. It would go to a different company, or you'll see that you know, whatever you do, don't click on the one that says log in to internet banking. Again, that's pretty generic. Plus, if you were to hover your mouse over the mouse pointer over that link, you would see that it does not correspond to the name of the bank, but it actually would have a fraudulent link on there, some website that's going to take you to a page where they're going to ask you for your credit card and other information. Okay, so as we approach the end of this webinar, where can you go if you're afraid that you have been a victim, or you might be a victim, or a family member might be a victim of financial abuse or fraud? Look at eldercare.gov. Eldercare.gov. You can look up the National Adult Protective Services Association. It's napsa-now.org. National Adult Protective Services Association. You can also go to the National Center on Elder Abuse, ncea.aoa.gov. If you're trying to figure out how to help pay off debts, of course, again, consider talking to Debt Reduction Services or another member of the Financial Counseling Association of America, fcaa.org. If bankruptcy is the choice, if you're considering bankruptcy, you're still going to need to meet with a credit counseling agency before you can actually file your petition with the court. So those are a few places to start. Now, going back to this theory of change, about where you are now, where you want to be, telling yourself how you're going to change, what's the one step that you're going to take today to get closer to where you want to be, okay? Is it, well, think about that for a moment and write this down. Argentina is your third passcode or password, Argentina, A-R-G-E-N-T-I-N-A, Argentina. So is your next step, does it involve completing additional workshops that we have available for free? Don't pay for financial workshops. Certainly don't pay $100, $200 to go to a workshop where you're not going to get any better information. You might actually get worse, likely get worse advice. Is it opening up a new account? Is it saving $1 even? What is your first step today to get you where you want to be? I sure wish you all the best as you start this or continue this path to where you want to be financially. We are always available for your inquiries. As a nonprofit, we provide free community. We'll sit down one-on-one or by phone and talk to you about any budget questions you might have or financial goals. We don't get into investing. We don't sell insurance. We don't do taxes. We are not bankruptcy attorneys. But we help you pay off your debts. We help you figure that out. We help go over your budget and your spending plan and your savings strategies and so forth. So look forward to hearing from you, whatever it might be, and wish you all the best. Hope you have a great day.